John. Okay, that's enough.
Okay. Excellent.
Okay.
So thank you for the folks joining today. For the folks who are not live, this will be recorded and available on our website, so you can let folks know. And I think that through this presentation, for whatever reason on the iPad, Mike's face remains frozen while he's
What remains frozen?
Yeah, it's odd. It did that this afternoon too, but your screen and your sharing is all good. You just are just a picture. So if you're making faces,
Well, that's a picture
no
of
one can see.
loveliness.
Yes, exactly. So I'm going to let you folks talk with Mike, and glad that you're here on a Friday evening.
Okay. The only thing is, Leah,
Yes.
are you going to stay or are you going to leave?
I will be in and out. What are you thinking?
No, that's fine. If you see something in chat, will you just let me know? Or maybe I suppose I could have Tina log in. Yeah. I can't have Tina log in.
Okay. So,
all right. So if you see something in chat, let me know.
Okay.
Or people just unmute yourself and ask a question.
Yes.
Whatever is easiest for you.
Okay.
You know, we're pretty informal. Okay.
Great. All right. Thank you very much, Mike.
Okay.
Okay.
All right. Mike's rules. If you have something to say, please try and be polite. It's all just us. I try very, very hard not to be political in anything I say. I don't think it's appropriate for me to be political. Ask questions as we go, because you may not remember what it was an hour from now. If I think I'll cover it later, I'll tell you that. And there's no such thing in the areas that we're going to talk about as a dumb question. What I'm going to try and do in this period of time is not go in depth in anything, but really provide you with some of the questions that you should be asking to your professionals, or if you see me around town and you want to ask me, maybe I'll answer it, maybe I won't. But there are a lot of things, there are a lot of questions that you should be asking, and a lot of things that we should be involved with in the next couple weeks and as we move forward. So these are my, I don't want to be your tax preparer. I don't want to be your tax reviewer. I don't want to be your gift and estate planner, and I don't want to be your financial advisor. I am basically retired. I try and do this once every year or so, just so that people have the ability to go out and ask the right questions, which I think is the single most important thing. And what I have found in my many years is that people don't ask the right questions, and a lot of advisors don't ask you the right questions because they just don't. All right. So somebody actually asked me this question at the post office today, and that is, how much is the standard deduction today? And young is under 65, old is 65 and older. And so basically what we're talking about here is, under the married, if you have both people like Tina and I are both over 65, that means our standard deduction, that is the amount of deduction that we get without any itemization for us, is $27,800. So you got to keep that number in your mind, as well as these other numbers. That's single, married, and head of household. I'm not going to get into great detail of what a household is, but simplistically, a head of household is a single person that has a dependent, a child or an elderly person that they take care of. So basically, you've got to, if it's Tina and I, we have to get past $27,800 of itemized deductions before we even talk about being able to get out of the standard deduction. All right. First thing I want to talk about is the the state and local taxation, everybody that's here in Waterville and local environments, you've gotten your local tax bill. Those of us in Waterville, it went up a little bit. But the simplistic answer is that you can only deduct $10,000 in state and local taxes. Now, fortunately, those of us here in New Hampshire, we don't have any state income tax. We have a dividends and interest tax, which is pretty small, and we don't have a sales tax. So basically, the biggest thing that we have for state and local income taxation, assuming you only have one residence, is your real estate taxes. Those of you that have maintained a location outside or have multiple locations, you're still only limited to $10,000. Those of you that have income, like I do, for example, back in Massachusetts, because my former firm still owes me money, which they pay me, therefore it's income in Massachusetts. I pay Massachusetts income tax. If the total of that income tax plus our real estate taxes exceeds $10,000, we are still limited to $10,000. So basically, think about what that says about Fatina and I. That means that our state and local income tax is limited to $10,000. We have to have other itemized deductions over $17,000. Now, thankfully, we don't have super medical expenses, so we're not going to get a medical deduction. So the only other thing there would be is charitable donations. We'll talk about charitable donations a little bit later. $17,000 worth of charitable donations is a lot, but we'll talk about some of the ways that you can do that a little bit later in this discussion. But what I want to talk about is something that some states have, and Massachusetts just passed. And I was on the phone with actually a former client about this the other day. And basically, there's a workaround for those people that have a business in Massachusetts. Right? There's a workaround that allows them to take a pass-through entity, which is an S corp partnership, and an LLC tax as a partnership, and basically have that tax, state tax, instead of having the income pass through on their state tax return, it's paid at the state level. I don't want to spend a lot of time on it. If you do have a Massachusetts or some other state entity and you're being taxed at that entity and it's flowing through to you, you really have to sit down, find somebody that understands this, all right, and figure out how you can do this and what it does and does not save you. It's a fairly complicated calculation. And I know in the Massachusetts situation, if you're looking at their forms don't do it right yet. So don't pay any attention for at least 3 or 4 weeks to the Massachusetts forms. All right. I do want to talk a little bit more in depth about charitable contributions. I feel that charitable contribution deduction is extremely important. And we're going to talk about several items here that I think are important for people to understand. Item number one, you'll notice that we have what's called an above the line deduction. What above the line deduction means that this amount does not go through your itemized deductions. So for example, Tina and I support several local charities. As many of you know, we support the Waterville Adaptive Ski Program. Some of you saw me jump on the water. So we support that. We support what? We support the Race Center. We support the school. We support the Waterville Foundation. We support the New Hampshire Music Festival. We support several other charities. All right. But what it means is that $600 of that is not going to against an itemized deduction. We're going to get to deduct it even if we do not itemize. That's very important. So what this says is people tell me that they're not making charitable donations because they're not going to get a benefit for it because they do not itemize. This year, that is not true. This year, married couple get a $600 above the line deduction. A single person gets $300 above the line deduction. All right. So that basically that amount of money you're going to get a tax deduction for, regardless whether you're going to be able to itemize or not. And that's item number 1. Item number 2, for some of us very mature people, over 70 and a half, we're allowed to do something very special. All right. We are required by law to take what's called a required minimum distribution from our 401k or IRAs. Right? So that simplistically, in my case, I'm 74. It's slightly more than 4% that I have to take from my 401k. What this allows me to do, should I choose, is that instead of taking that required minimum distribution and taking it, putting it in my pocket, look around and give it to charity, what that would mean is that would come out, it will be included in Tina and my income. And then, since we're not going to be able to pass that itemization amount, we wouldn't get benefit for it. What this says you can do, and there is still time to do it, you had 2 weeks, you can go and talk to your 401k or IRA administrator and say, I want to make a direct contribution from my IRA to XYZ charity. So for example, let's suppose you wanted to give $5,000 to the Ray Center. And let's suppose that, just to make some simple, Fidelity was controlling your IRA. You would contact Fidelity, tell Fidelity you want to make $1,000 distribution direct from your IRA to the Ray Center, the Ray Cultural Center. It would not be included in your income, which is fine, because you wouldn't be getting up to the $27,000 worth of itemized deduction. So basically, this is something that you should be considering if you want to make those charitable contributions. It does count as part of your required minimum distribution. So it can be a really good deal, right, for what you have to do. And it is something that, depending upon what you want to do and how much you want to do and whether you need the money as a distribution from your IRA or 401k, again, this is something that you should be talking to your advisors about doing if you want to make some kind of charitable donation in the next 2 weeks. Now, the third one, which very few people know about, right? And this only applies, so far at least, to 2021. In 2021, there's what we are euphorically calling a huge distribution, charitable distribution from your IRA. Under normal circumstances, you can only take a distribution from your IRA up to 60% of your income. This year, and supposedly this year only, you could take 100% distribution, which makes it why I would call it huge. Again, this is obviously not for everyone, but basically what it allows you to do is wipe out, or almost wipe out, or wipe out as much as you want to wipe out of your income. And unlike what we talked about before, this is good for anyone that is 59 and a half, right? So again, you got to see whether or not this applies to you, what you want to do. I believe very strongly in charity. Tina and I do a significant amount of it. Again, these are options that you should be discussing with your advisors. And I know that in this case, Fidelity is aware of it. Fidelity knows how to do it. Fidelity also knows how to do up to the $100,000 for those people that are 70 and a half. They know how to do that as well. Okay. Several years ago, it occurred to the government, to the IRS, that we have no trail of cryptocurrency. And does everyone, for those people who don't know what cryptocurrency, the best known cryptocurrency is obviously Bitcoin. So that basically, you may have heard when you watch TV or whatever, and you see that all of a sudden on TV comes on and the show says, well, there's ransomware and they want to be paid in Bitcoin. The reason for this is Bitcoin is untraceable. All right? There is no way that they can trace it, unlike dollars. All right, if you go and write a check, all right, if you make a cash withdrawal from the bank of over $10,000, it's reported to the IRS. In this case, Bitcoin, other cryptocurrency, is not reported to anyone. That's why you see that it is being used in these situations. It is being used to pay for, theoretically, some not nice things, as well as some very legitimate things. So what the IRS started doing, and it started doing it about 3 years ago, but they buried it 3 years ago, and they put in this question. At any time during, at that time was 2019, did you receive, sell, exchange, or otherwise dispose of any financial interest in fictitious currency, in cryptocurrency? And the answer to that is, if the answer to that is yes, you then have to go and explain it. So that was all on a schedule that only a few people had to do, and most people missed it. So what the IRS did is they moved this question forward so that it was now last year on the front page of the tax return. I just looked at the draft 21040 for this year. It's right there on the front page of the return. And if you say yes, you have to explain why. Now, I will warn people. I know many accounting firms have what's called a draft return. And in that draft return, they say, okay, these are the way we're going to answer questions unless we're told otherwise. Every firm that I know of says for this, the answer is no. Well, here's the issue. If you answer that no, and the answer is yes, the IRS has indicated you just filed a fraudulent tax return. And if that sounds mean and nasty and something you don't want to happen, that's because it's mean and nasty and it's not something you want to happen. So please, 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 if you are touching any kind of cryptocurrency, and there are several of them out there, besides Bitcoin, I always use Bitcoin, it is by far the largest. Just be very, very careful. Make sure that if you touched it in any way, shape, or form, just say yes. All right, say yes, explain it, and it's not a big deal. All right. If they do find out that you answered it incorrectly, like I said, filing a fraudulent tax return is not fun in any way, shape, or form. Okay. All right. I want to talk a little bit about Roth IRAs. Why is a Roth IRA? Why do people think that Roth IRAs, if you listen to certain financial advisors who will tell you that Roth IRAs are the greatest thing since sliced bread. And the reason for that is that if you put money into a Roth IRA today, when you take it out, it is tax-free. The money put in take out is tax-free, all the growth is tax-free. So that basically all the money that is accumulated over the course of years never gets taxed. That's what a Roth IRA does. Is it good for you? Is it bad for you? Is it something you should do? I can give you lots and lots of explanations why it's good for you. I can give you lots and lots of explanations why it's not good for you. You really have to sit down and figure out whether a traditional IRA, a non-deductible IRA, or a Roth IRA, and those are three different categories, are in your best interest. For those of you, if there are any of you that are out there that are still working, you should be asking your employer whether or not they have a Roth 401k. Not all businesses do. It is something that I know back in our firm, it is something that we offered. And see, we had about 100 people back then, and I think about 15 of them took advantage of it. So it's not a common thing, but it's not uncommon. It is, once again, any type of Roth IRA, really got to sit down. It can be a very, very, very powerful financial and or gift, well, not gift, but very, very powerful estate planning tool also. Again, I'm not here to go into super detail about any of these things. It is something that you really have to ask the question and find someone that knows what they're talking about. If somebody starts talking to you and it doesn't sound like they know what they're talking about, I don't know if you heard what my mic just said, but run. Run, not walk. Find me. I will find somebody for you. I have gone to several seminars put on by some financial advisors in the lakes and mountain regions, and I will tell you, at least 50% of them I would run, not walk, to get away from. That doesn't mean all of them, but a significant number. You have to be very, very careful. And near the end, I'm going to give you a major question. The first question you have to ask these people. All right. Now, let's suppose, and not everyone can contribute to an